Welcome to another episode of Game of Investing podcast. Today I'm going to bring out something which is transforming the whole world of finance and payments to that extent. And I'm talking about the Chat GPT movement for stable coins and the beginning of end of the Bitcoin and altcoins, which is pretty counterintuitive at this juncture because Bitcoin has been moving up a lot. But I would say this is kind of the shift from bitcoins and altcoins in the crypto world towards stable coins. So blockchain has been in the industry for last 10 to 15 years, but people and across the finance industry, across the financial institutions has been trying to deploy and implement blockchain. But the real movement of the blockchain, the real application of blockchain is through the stable coins, because finally after 10-15 years of different trials of the functional use case of blockchain, we have come to a moment of implementing the actual significant impact which is transformative for the whole payments world, and that is stable coins. So what do you expect when it comes to a transactions? When you're doing a financial transactions, what are three things that you look for? One is it should be fast when you swipe your card and the transaction should go, or when you're doing an applications online or buying something online and make a payment, it should go seamlessly, which means it should be fast, it should be secure, which means there should not be fraudulent activities. And third, it should be cheaper because you should not be charged, or the merchant who is going through this transaction should not be charged a very high transaction fee for that transaction. And what if I tell you all these three things are made possible by this stable coins advent, because stable coins are able to make transactions at a very secured in the blockchain network, which is the most transparent network out there, and it is able to do it at a very rapid pace 24/7 online, because this technology is available 24/7 and at a marginal negligible transaction fees or cost to the end merchants, and because of which as consumers we tend to benefit because the merchants can reduce the cost or take benefit out of this low cost transaction fees. And until now, hitherto, we were not able to get benefit out of blockchain technology because of one primary reason, which was the price stability. Bitcoin did not have the price stability, neither did altcoins, any of the other coins out there had the price stability. One day it could be priced at some say $100,000. As we see, it's highly volatile in nature, and when you go to make a transaction which is a high value transaction, especially like a home purchase or buying a costly car or whatever that is, if the price instability is there, customers won't feel like using that tokenized asset, right? Although these are digital in nature, these are tokenized, which means they are, on the blockchain technology. There is a token associated with every asset, and it is validated for every transaction. But a customer will not feel like using it if the price variations or fluctuations is so much, like between 10 to 20K, within few months, then it is not of use. But stablecoin exactly addresses that issue. It brings in the nature of the price stability. So what is stablecoin? To put in a very simple terms, stablecoins are nothing but digital currencies or digital money which you can use to do transactions. And the beauty of the stablecoins is they have price stability. And how do they achieve price stability? Because they are mapped to an underlying asset like a digital US dollar, or it could be a digital or US or a Chinese yuan, or it could be gold. It could be any asset in the future. So this asset drives the price of the mapped stable coin. It's nothing but a cryptocurrency running on a blockchain technology, blockchain or on-chain network, which is a network of transactions, financial transactions, which gets validated, which is a digital ledger out there. You have bank ledgers where the banks maintain the physical ledgers in separately in physical form, but these are digital ledgers which are out there on the internet. So it's literally internet money. The ledger is out there tracking and being transparent about all the transactions out there, because all these transactions are validated on the blockchain technology, which cannot be tampered with, and they are secure and they are fast. They are available 24/7 online. These are the beauty of stable coins, which is not possible in a physical transaction, especially when you have to do cross-border transactions in trillions of dollars. It is important to have the fast, reliable and 24/7 network access. That is the blockchain network. So the blockchain technology has been always there. That's why I said, real application has come to existence or prominence because of the price stability. There are two companies which are primarily driving the blockchain technology. So one is Tether, which had started issuing, the cryptocurrency or stable coins erstwhile, but now Circle has come into prominence along with Coinbase, because Circle and Coinbase are together driving the next leg of innovation for stablecoin industry. Let me explain. Circle is a company that is issuing stable coins in the form of that is mapped or pegged to US dollar, which has the ultimate price stability, right? So one USDC, which is an stable coin issued by Circle company, it's called USDC. It's mapped to US dollar. That's why it's called USDC. It's a digital dollar out there which can be used to do any transactions. But the beauty of it is you can do the transactions secure, fast, and at the cheapest way, and 24/7 on the blockchain technology. Now, Coinbase is the backbone of this whole transactions because Coinbase facilitates and is a custodian of all the transactions. So 50%, roughly 50% of Circle's revenue today goes back into Coinbase because that is an agreement they got into when they formed the consortium for these blockchain transactions and technologies. We don't need to worry about all that aspect, but today we need to understand that Circle as a company is a beautiful business because just by buying these USDCs, there is a provision that Circle gives to reinvest this back into the treasuries and therefore get a yield out of these investments. Stablecoin circulation has roughly doubled in just last 18 months. So the adoption has aggravated or accelerated with the Genius Act passage, the law passage, and multiple large institutions like the JP Morgans and the PayPals of the world jumping into this arena. So with this kind of functional use cases that are out there, you can see on the screen, stablecoin transaction volume will become mainstream in the next 5 years. Today, it is exceeding $30 trillion. The volume has sharply risen, roughly the total volume has exceeded $30 trillion, and it is an exponential growth. You can see the exponential growth in the nature on the transaction volume, which is pegged to the US dollar. Tomorrow, it could be pegged to the global currencies. It could be multifold of this. Now, what are the investment thesis from this? Now, I said Coinbase and Circle are having a revenue sharing adjustment relating to the Coinbase, right? It roughly receives all the 50% of the Circle's USDC transaction volume. Why I'm calling Coinbase as the Visa of the modern finance or modern payments? Because Coinbase monthly transaction users in Coinbase holding USDC has roughly 2x in the last 2 years. And the number of USDC holders in Coinbase has also gone up 3x in terms of the number of users holding the USDC. So with the increasing volume or the adoption of USDC among Coinbase users, both in terms of the users and transaction volume, Coinbase has launched its own stablecoin platform for e-commerce transactions. For example, it's something called as Coinbase Payments. Coinbase has its own stablecoin e-commerce transaction payments network called Coinbase Payments, which facilitates almost all transactions that you're buying online. Amazon is launching its stablecoin. Shopify has integrated Coinbase Payments network. Walmart is launching its own payments coin, stablecoin. And now all these stable coins will be transacting. There needs to be a network, right? Gone are the days where Visa and MasterCard, which are the interchanges or the associations that will charge roughly 2 to 3% of the transacting fees, right, as fees. And it was a monopoly business. They were charging 2 to 3% of the fees as fees, total transaction charge as fees. And today with the stablecoin adoption, it's less than 0.1% fees. Look at the change. Merchants are going to save directly 2 to 3% out of every transaction. Now, banks and financial institutions will be saving a lot by adopting stablecoin. They don't have to pay MasterCard and Visas and other interchange associations like Discover and other things, right? With PayPal, with JP Morgan, everybody getting into the bandwagon, the transacting fees is getting less than 0.1%, which is directly getting benefit to the merchants. To some extent, customers, they can be passed to the customers. So with Amazon, Shopify, probably Shopee in Southeast Asia or Alibaba, who are all launching their stable coins and adopting stable coins, you can buy anything on the e-commerce websites by using stable coins in the future. For example, it will allow PayPal, PYUSD, pay with crypto. Right? Coinbase has launched its own Coinbase app called Coinbase Base app. So it is nothing but Base app is a digital wallet owned by Coinbase, and people can do transaction using pay with crypto option that Coinbase is giving to the Shopify and to the Amazons of the world. So Shopify has adopted it already. You can go purchase something in Shopify site and you can pay with crypto. Indirectly, it is leveraging or utilizing the network of Coinbase payments network, and the app, that is the digital wallet they are using, is Coinbase app or digital wallet called Base app. Right? So Base app is the future digital wallet. Coinbase network is the future network. Or it could be Circle's payments network. There is a Circle's payments network which is similar to Coinbase payments network. You can leverage Circle's payments network as well. Circle is being utilized by JP Morgan and many financial institutions to launch their own stable coins. Coinbase revenue from stable coins growth has almost 2x'd in the last 1 year, and it has become a significant portion of Coinbase revenue share. As a percentage of revenue, Coinbase used to get revenue from crypto and other transactions, brokerage and all that, but today stable coins has roughly become 20-30% of Coinbase revenues. It could accelerate to 70-80% of Coinbase revenue. Coinbase is no longer just a brokerage, it is the backbone of stablecoin industry. Circle too, you can see on the screen, that's a Circle platform out there. It's called CPN Core Payments. That's Circle Payments Network. And you can see business payments, the service providers like billing, forex, micropayments, consumer payments, institutional adoption, treasury yields, government payouts, digital finance, distributed finance, all of them, retail payments, supply payments. The entire payments network and the global finance is getting hooked on to the Circle's payment network as well as Coinbase payments network. Whether it is e-commerce, whether it is forex transfers, whether it is intercontinental transfers, whether it is money, money treasury yields, money market funds, all of them are getting into this network. And Circle and Coinbase are the direct beneficiary, which is why you see Circle's market cap has gone up almost 4x, 5x since their IPO. Because people have started understanding this is an exponential growth. And it is both Coinbase and Circle are still less than 100 billion market cap. These both could be $1 trillion market cap in the next 1 decade. I'm not saying they just going to monopolize, but this is a network business. We saw MasterCard, Visa, Discover. There are only 3-4 players out there. It's a duopolistic industry, oligopolistic industry. And we saw them ruling the roast for the last 4-5 decades. Similar is this industry. One who has the blockchain network, one who is the first mover, and who has the regulatory advantage will win this game. Robinhood is not far behind. Robinhood has already tokenized equity assets recently, and people can buy private companies through the tokenized assets, which could be primitive. There could be debate about the validity of these transactions. Robinhood had launched the equity asset tokenized to the private assets, but it is in the nascent stage, but eventually they will gain adoption just like stable coins gained adoption. So tomorrow you could be owning equities which are tokenized in nature, like through Robinhood, through Coinbase. So there are only 2 players which are in the brokerage and custodian services like Robinhood and Coinbase. There could be 1 or 2 more, and Circle is the payments network. So, but there is something like I'm seeing a trend which is like only 3 to 4 players globally which are going to hold the network. But every institution and every payments player out there are launching their own stable coins. They don't want to get into the network for whatever reason. And the incumbents out there like the Visa and the MasterCard, as always, the incumbent players are not ready to accept that stable coins will eventually replace. They will eventually die out. This is the iPhone movement of stable coin, or the ChatGPT movement of stable coins, as I said. But one more important thing is, why do you need Bitcoin or altcoins as digital gold or whatever people used to call? You don't need Bitcoin in the future. This is probably the beginning of, it's a conjecture, I don't know, but probably the end of Bitcoin or beginning of end of Bitcoin in the next decade. So while stablecoin adoption is taking exponential growth, the Bitcoin might come down the other way of the curve. And eventually, I think stable coins will take over and there will be a currency stabilization, which is one of the big pain today. Chinese depreciation, currency, US dollar depreciation, there is fluctuation so much, but with stable coin a lot of that will get addressed, right? We need to wait and see. It is a very nascent stage, but it's a multi-trillion dollar industry, and I've told you what are the biggest players out there, so that it is a nascent stage. People are still thinking Circle has gone up 4x, Coinbase has gone up 2x, but believe me, this is a nascent stage of a big exponential growth industry ahead of us, because financial transaction, I was in the financial world for the last 20 years across payments networks, across associations, across remittance businesses, and companies like Fiserv, and I've seen it all. And I think this is stablecoins is going to rewrite and re-engineer the whole financial world for the next 1 decade. I think we are at the cusp of a big change. So wanted to bring this in my podcast. Trust this was helpful. Signing off, Sandeep Anand.